Good morning, everyone. This is Daily Trading Analysis with the weekly recap for this week, in which we completed February. We finished February trading, and on Friday we started the first day of March. And oh boy, we squeezed quite a lot. We pushed all-time highs again, and with a lot of people thinking why. And I have some answers to that, but let me tell you that this market is quite crazy. It's pushing every technical, every fundamental, every sentiment on FOMO. And if you are feeling the same, just don't worry, because there's a lot of people, even professionals, investors, professional traders, that are thinking the same. That's why we have to always think about downside and to not be overly optimistic. Sometimes always manage our risk, but if we see opportunities, we have to take them. So, as always, we are going to start with the fundamentals real quick, and then we're going to perform the technical analysis that may provide you some answers. I've seen some technicals that maybe are pointing towards the same direction of the price, but some other signals that we have to always take into account to not be overly optimistic, because when no one will expect it, then the market will start doing the same, just as we did on Friday. When no one was expecting a rip in the face of everyone, then that happened. So let me just cover the fundamentals first. Monday, not a big of news. New home sales, yeah, established more or less in the range. Month over month, 1.5. The sector is still struggling with building permits and also with the big high interest rates that households are dealing with. So new home sales are more or less standard numbers. On Tuesday, S&P home price, the Case-Shiller home price index minus 0.3 month over month, but year over year, look at these prices, 6.1. As you can see, throughout all the week, we are going to see a lot of Feds. And that's one of the things I would like to highlight later in the week, because these Feds were quite hawkish, but they were leaving behind some sentences, some statements that I think the market may think about them quite in a bullish way. On Wednesday, GDP, the one of the first days in which we got big data, second estimate on Q over Q for Q4 last year, 3.2%. A little bit lower than the consensus, way lower than the previous one. And on the price index, also quite lower. So this is showing that inflation is going down. And I think this is a tick. This is a tick, the first tick of the week. And then we got Thursday, the PCE, one of the big measures that Fed is watching. And as you can see, came higher than the before, higher than the 0.1, but as expected in a lot of readings. I covered this on my Thursday's video, but look at this. Personal income, 1%. We were expecting a little uptick from the previous one, 0.3. I think this is a miss, because more spending means more inflation. More income means more inflation. And the spending is basically, as expected, a little bit lower than the previous one, 0.7. So pressuring lower on the spending might be a check. But the big thing was Bostic, Goldsby, Mester, and Williams saying really hawkish statements, like they are not thinking about cutting interest rates. They think appropriate on the Fed funds rate right now. They see some things on the PCE that are not optimistic. So as you can see, the market should know that the interest rates cuts are not going to be as soon as they think they are going to be. But on Friday, everything changed with the PMI final showing a little bit higher PMI for February. That's a tick on the economic side for strength. And look at this. Manufacturing PMI came lower than expected, and employment way lower than expected. That coupled with the fact that the consumer sentiment final for February was really a surprise, 76.9, and we were expecting higher than before. Look at this, from 79 to 79.6. So the consumer sentiment is really getting a hit. And all these Feds were then saying that this reading of consumer sentiment is really aligned with the expectations for a 2% target. And this is what I think spiked the market. Now, if we see the interest rate probabilities, nothing has changed. Right now, we are on hold until June, in which we are going to start cutting rates. I think this is quite certain. This is what markets are pricing in. But only one cut at that point. Another cut on September, and the final cut in November, December, to end the year with 1, 2, and 3 cuts this year. Only 75 points because we are dealing with 10 to 5 steps. This has not changed since the fact that we moved from here to here, but this doesn't provide you a lot of answers with information to really know why on Friday everything spiked. Now, on the technical side, I may try to find some kind of technical answers to that, but let me just show you something that I usually see on the close. This is preliminary data for the open interest on the S&P 500. Look at the open interest. 25,000 people open contracts at the close. On the S&P and on the Nasdaq, 11,000. So this means that this is not just short covering. This is contracts left open at the close of big money entering the market. This is converging with the fact that we spiked through all-time highs and we continue higher. Money is still coming into this market, and that's crazy to understand, but it's happening. In terms of the sector performance, as you can see, this is for the week. Technology, consumer discretionary, and real estate really pushing the markets, and the defensives are on the downside. Utilities, staples, and healthcare are on the negative in the week. So again, this indicator, this performance shows you that risk is on in the market. You know about Bitcoin, right? I don't cover Bitcoin in this channel, but you should know that Bitcoin is really risk on right now. So as you can see, we've seen a lot of information that is aligned with the fact that we are pushing again the all-time highs. This is the NQ daily chart. And let me just show you how we ended the month. This was February candle, pushing all-time highs. And now we have 1, 2, 3, 4, 5 months straight in the green. We have to always be careful with these readings because on the monthly, if we start seeing some kind of reacceptance below the previous level, that might be a sign. But for now, I wouldn't care because we just started the month of March. What I would really like to know is we are pushing one time all-time highs and then pushing again all-time highs, all with these candles. Look at these candles that broke all-time highs. They are quite bearish. But I think a lot of shorts are trying to push this market down and then get squeezed. That's one part of the equation. But I think there's more than that. I show you the open interest and I show you the performance of the sector funds. I'm going to show you other markets that are also coming with inflows of money. But first, let me see how we can address what happened this week. this was Monday, Tuesday, Wednesday, Thursday with the PCE, and then continuation higher through all-time highs. The daily is still there. Do you remember when I told you that one of my reasons I don't wanted to enter long up here was because we were in a channel, but I wanted to basically retest some of the previous imbalances to just gather some liquidity, but that didn't happen. So I lost my big opportunity to really trade big this breakout. That's part of my risk management. But on the other side of the equation, we have let me just show you what happened on Thursday. On Thursday, we got this spike to the downside, and then the PCE spiked up, and we kept that balance intact. We touched and we retraced. And I was thinking, okay, are we seriously going to go through this 1 hour inverse? We respected that on the PCE day on Thursday, but then on Friday, we just went through that. Now, Friday was super tricky. Why? Because we took all-time highs during the overnight. So this was Thursday, the dip, and then the push higher. So I was quite bullish going into Friday. But let me tell you, this lineup here is the all-time highs. So during the overnight, we just took it. So markets don't like that because there's not a lot of participants during the overnight, and they want to be part of that move into the all-time highs. So I was watching the price action, trailing the imbalances. They were leaving behind a lot of liquidity, but I was not gonna enter here. If not market goes, okay, it goes. I was waiting for the manipulation move to the downside to leave all the people, to stop all the people out, and then try to catch the reversal higher. That's the kind of thing that you see in here. This is a huge manipulation move to stop out all these people that were leaving their orders with stops below the pivots. And when you see this manipulation move, you have to be prepared. I was prepared with the pre-market low and this pivot. I had also a lower pivot down there. But if we zoom in there, the manipulation move from here to here, that's quite big. There was no news, nothing. It was just liquidity grab and then trying to go out of the way. I took the second entry. I was not confident in here because maybe I didn't know something. But as you can see, I have this. This is a projection higher that we are going to see. And then from the first leg, I was waiting for that pullback. And this pullback into the golden pocket and the 50% retracement, this zone, I took this candle. The low was basically here. I was maybe expecting something like this again. So my stop was really tight to bring me the opportunity to enter again. And what's my target? I really thought that this was a manipulation move. So my target was just the retest of pre-market high to really bring all these people in. This was a 1 to 10 risk-reward ratio. That's huge. And that was only one contract. I was willing to hold this trade through the open and keep trailing the stop. Not that much, but the break even is going to be around 1.5 for that. 100 points of target is something that I don't usually do, but with one contract, the risk was pretty low and the reward was huge. And as you can see, I was watching this 30-minute inverse and the price was just going higher and higher. Once we moved around, I think it was around here. I traded my stop to break even. This was quite a relief to see that they tapped into this 1 minute fair value gap. and they continue higher, I was really afraid of just tapping me out from this 5 minute and then continue higher. That didn't happen. And look at the open. The open just spiked higher and started to grind higher and higher and higher. And I didn't take more trades because my target on the day, $2,000, was already hit. But what can you do when you see this market grinding higher and higher and you have no reference higher? When you have no targets to the upside because we are at all-time highs, one of my recommendations is just at this happen, this was a manipulation move, just you can have just that reference. Let me just go to the 1 minute again. The projection, this is a projection of the manipulation move into the upside, and as you can see, I have my template for 1.5, 2 and 2.5 times this move into the upside. This happens a lot of the times, but the manipulation move was so big that I was really, I mean, there's no way we are going to be at 18,300, almost 400 here. Well, market had other other intentions. As you can see, we grinded our way up without any pullback. This is insane. Money just keeps flowing in, keeps buying and buying and buying, and this is a combination of shorts trying to short the top and getting squeezed, and also big money inflows. As I showed you before, open interest in both Nasdaq and S&P is pretty huge, so big money is still coming in. But try these things. Manipulation moves into reversals are my A plus setup. This was not an A plus setup because it didn't have one or two of my preferred setups, but it was a B plus, even an A setup. But this was insane. I was not expecting this. And you're not the only one if you think that this is insane. A lot of people are getting insane readings in the technicals and seeing these moves. So without any clear reasoning behind. So how can we understand this? Well, the first thing that you have to think about is dollar. What is dollar doing? Dollar is dumping. So dollar tried to go higher. Let's see the daily. Dollar was stepping higher. I was quite bullish here, but then it started to hesitate. If dollar was supposed to be super strong, we should be seeing this. So this is the first signal. If we go to the 30-minute, we can see that at 10 on Friday, something changed. This was the PCE reading. So with the PCE reading, I was not super bullish on dollar. But once I started to see the dollar just dumping and dumping and dumping and dumping, I said, okay, people is not going to dollar. This is bullish for stocks. But how about treasuries? Are treasuries expecting something different? Yes, they are. Look at this bullish move. As soon as this move started and continue higher, 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 treasuries are bullish with stocks, are converging with stocks. Our treasuries bonds are seeing lower interest rates in the upcoming months. So that's good for treasuries and also good for stocks. So there's a convergence between dollar and treasuries. What else? Gold spiked 2% on Friday. That's one of the biggest increases in gold in maybe even 1 year. That was 1.573% on October. Yeah. Look at this move. Squeezing through the daily, squeezing through all these weeks. Gold is pretty damn bullish. And when you see these things, you understand that, okay, dollar is bearish, gold that is bullish, and is also converging with low interest rates. Treasuries are bullish. What are doing small caps? Small caps are pushing. Okay. Yields are going lower. How about financials? Financial was one of the mixed bag, but that's also interesting because when you see that interests are going to be lower, their main income, one of their big incomes in revenue is interest rates. So that's why financials struggle a little bit when the Fed will start cutting rates. But still, they are on the daily financials, they are quite strong. Look at this huge move. This is XLF, the sector fund. So we are, as you can see, we are quite bullish in every other way. But the fundamentals are not there. That's the thing. It's not super interesting to just buy the top every time. Investors are not willing to go in this market because they need to buy on premium. They need to go into the market and buy the premium at the top. And that's not usually a good strategy. But right now, they are seeing AI. And AI is blinding everyone's reasoning, everyone's strategies, because FOMO is quite big on everyone. Nvidia is pushing this market to really high prices, even in forward PE ratios, and investors are 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 not willing to buy, but they have to buy not to missing out on the AI move. So this is a mixed sentiment. Why you see traders willing to buy at the top? Okay, with risk management, but investors are are obliged to basically buy at these high prices not to miss the AI push. So that's why you see Nvidia 4%, Meta 2.48%. Let's see the 1 minute on these guys because these were pretty bullish. So Apple was just dumping and then reversing. Once Apple started moving higher into the afternoon, I was pretty sure that the market was not going to pull back, because if we were basically on the Nasdaq going higher and higher while Apple is in the red, deep in the red, come on, you are not. When Apple wakes up, then the market will continue higher. Microsoft a little bit in the green, Tesla a little bit in the green, Amazon a little bit in the green, but quite bullish. So it's Google was the one being hit, but it's Nvidia and Meta and the AI mania that is pushing this market to unbelievably high prices and risk. The thing is that risk is still there. We are still at all-time highs. You can have a technical setup that maybe justifies a trade, but day traders are not the only one in these markets. Investors, hedge funds are also here, and looks like they are still pouring in money on the AI mania. So that's why it's so difficult right now to trade. You are not alone thinking that this is a very difficult time, even though we are breaking highs and at all-time highs. It's not easy to trade. So think twice next week, in the upcoming weeks. Don't fall into FOMO and always manage your risk, because there's a lot of money in this market that are buying on premium, buying on FOMO. And if the fundamentals are decent, okay. But if something big happens, that money will disappear instantly. And we can have a quite severe rejection and also correction. That's what I'm afraid of. That's why I'm really hesitant to really do these 100 point takes, 100 points trades, because I was monitoring the trade, but I was really not confident on this. When I'm not confident, I really trail the trade. I was quite good on the week, so I could just barely risk 10 points for sure. But I am not greedy. But there's a lot of greed on this move. A lot of greed, a lot of FOMO, a lot of I will just buy and forget about it. And that's really bad practice. So trust me, manage your risk in the upcoming days, in the upcoming weeks. Continue doing and being hesitant on certain setups. At some point, that will save you tons of money. Because one, there's a lot of money being put in these markets at premium, at all-time highs. Two, the fundamentals are not super bullish and optimistic. We are starting to see Fed more and more hawkish. And the season in March and April may change due to the elections. And I mean, just think twice. Always think about downside. Don't think about we are going to the moon, because that might change. We all saw how the markets are really hesitant to do things, and you have to always think twice about that. This is the 30-minute chart. Look at this move. This move is it's not rational. It's not rational. Anything can happen in these markets, both sides. And when we are up here, we have no reference. And think about investors, big banks, hedge funds, what they are going to do up here. Are they going to hold? Are they going to continue buying dips until the end of time? Just think twice, because I'm bullish seeing the price action, but all the pieces together make no sense at all. Make some of sense because we are seeing open interest increasing, we are seeing breaking of highs. That should be bullish. We are seeing other markets also pushing. But if you start preparing to the downside, even in the best of times, that will save you a lot of money. Always think about downside and don't be following the FOMO, the media, on the AI all the time, because that's what they want. Be careful with these moves. I don't know what is going to happen, but I'm even more hesitant than on Friday. I will try to take opportunities to the long side every time, but I don't know about this. So you have the analysis from the fundamental, from the technicals. I don't have a forecast for next week. I need to see the overnight into Monday. And even though, let's see real quick what is the week ahead. So the week ahead is no news Monday. Be really careful with this. ISM services PMI on Tuesday. We have Powell and Jolts on Wednesday. That is going to be huge. Another Powell testimony on Thursday, and Friday we have NFP, non-farm payrolls, and unemployment. So wow, this week is going to be huge. So be really careful. What happened on Friday was just unexpected. We made money, but that doesn't mean that we are going to blindly follow and buy every dip. Be careful with that strategy, because at some point we may have a correction on the AI mania, and that's going to be quite bad. Be really careful. A lot of money coming in, but at the same time, that huge money may come out at some point if they don't get what they want. And that's all from my side. As always, thank you for your time. I do these weekly recaps every week on Saturdays. I hope these videos are useful for you. If they are useful, please support the channel by giving a like and subscribing. I also upload market forecast and market updates and market recaps every single day of trading in the week. So if you want to watch those, please follow the channel. It was a really difficult week again because we had all-time highs break again, and this FOMO keeps pushing the markets to really high prices and premiums that not everyone is willing to pay. So be really, really careful at this point. Discipline, patience, risk management, those are going to be key for your success. Stay safe, everyone, and see you on Monday. Have a nice weekend.